Guys, you know what I'm wearing. This means I'm cooking, and today we're making a noodle soup. You see, all vegan, cause, we wanna wanna make it, the good karma for tomorrow. Let's see how it goes for tomorrow. And then for those of you who wanna know our prediction or our sort of like a state of the economy statement, you should go watch the previous video that got uploaded before this one. And then this one, other than bragging about how good my noodle is gonna be, we're gonna talk a little bit about what is so-called the energy transaction, or technically speaking is why we see so much inflows of buying volume of energy stocks or oil stocks. Well, here's the reason, right? In the previous video, I talked about, when war happening, oil price will increase. Why? Because we cannot make an EV plane. The electric current is not powerful enough to power a plane yet. That's first. And I know that there are two startups that are doing it. One is doing really, really great job about it and landing a government contract, but that's for another video. Okay. Another one is you don't have electrically powered tanks. You can do that, right? And also a lot of those weapons got shipped on oil. Basically, all of these ships are powered by oil. So every army soldier that you send to a place, you essentially increase the demand for oil. And the fact that when countries are at war, that just means the oil price will increase, especially in that region. And look at how Russia is doing, right? Russia is one of the biggest oil producing country in the entire world. Same with natural gas. So let's just say they decided, hey, tomorrow I'm not gonna pump some natural gas or pump some oil to some European regions, and then it's gonna have a little supply shock here and there. And then the US actually is not a big exportation for oil, and then we don't extract enough oil as ourselves, which I think is a really good strategic strategy. But in a highly inflationary environment, that would also pump the WTI, which is one of the oil indexes, which I don't really use. I use the Brent index for trading, and then it will just pump it up short term, right? And then eventually, the higher pump was gonna go down, and you will see a sort of like a downstream consolidation of oil. Like for example, like when oil price will slowly, consolidate to higher points of average, then maybe oil services like Halliburton and SLB will benefit. But in reality, because all of these companies hedge their position so much, they don't really benefit from very, very high oil spikes anymore, unless they decided that they're going to excavate more or they're going to open up new wells and all this kind of stuff. We're going to discuss this with Bronco maybe next week when he's feeling better. I think he is feeling better, and we're going to do a collab. And it's just like this week I had too much work to do, so I haven't got a time. I need to rearrange that, and we plan to do a crossover or plan to do a collab with Spot on Trading. I think. Thank you, Charles. He recommended it, and he said we are both be very rational people, and I think will be very interesting that we talk about some stocks, maybe talk about some MMAT, and we can talk about the market too, right? And then there are some very interesting movement going on in NASDAQ and oil futures and Dow Jones futures. For those of you who are anxious about tomorrow's market, you should go check it out, especially tomorrow morning when you wake up about 5 o'clock in the morning or 6 o'clock for me. Or if you're on the East Coast, it's 3 hours ahead, right? You should go check out how the bond yield goes. If the bond yield actually increases, that means the market expectation for a rate hike is very, very high. And then usually what's going to happen is the equity market, which is the stock market, will go down. And depending on what Jerome Powell says, it either going to continue or it's going to stop a little bit. But the probability of we going back to all-time high is actually pretty low because of the high inflation problem. Inflation itself is not a problem, but problem associated with inflation and spending habits is the main problem, where inflation is going to indirectly influence the market rather than directly influence the market. As we talked about before in previous videos, we talked about inflation has shit to do with the market, right? There's no correlation, but other effect caused by the inflation will actually do market some very interesting blows, or do a really good blow job on the market, and will just shoot up like a morning wood, right? Anyways, this is it for this video. It's very short, 5 minutes. Hopefully it helps you guys. I don't know how am I gonna name it, but if you like it, sub and like this video. See you guys on the upside.